Welcome, everybody. I do hope you guys have been awesome. If you're new to the channel, my name is Leon Tsepo Mashalani. Today's topic is quite simple, right? It's actually another request from the comment section on what is the difference between an actual break in market structure and a fake break in market structure, right? So that's the topic we're going to be dissecting. So we're going to divide that into two, right? An improper market structure and a proper market structure, because we have to start there first and then work our way out up to the break and the fake break in market structure. So that's the first thing that we're going to tackle. Second thing that we're going to tackle is we're going to look at Nasdaq. Believe it was yesterday I actually took some trades on Nasdaq, a sell trade, not many, but just this nice sell position that I took on Nasdaq, and I'm actually going to show you guys what I was looking at when I concluded that. So I understand that I did mention that I normally don't trade on Mondays, and I like to just wait out for Monday to play out for me to make a conclusion in terms of what's going to happen the entire week. So there is actually a reason why I trade like that, but that's a reason that we'll talk about at a later stage, right? So today we're simply going to be looking at what happened yesterday and how one could have capitalized on yesterday's market and what you can expect today to be like in order for you to also capitalize on possible move for the entire week. So stay tuned. Before we get into everything that we share on this channel is for educational purposes only, should not be considered as financial advice by anyone or any institution under any circumstance at any given point in time. So be sure that this is not financial advice of any kind. This is strictly educational purposes only. Be sure that you're subscribed, click the notification bell so that you get notified every single time I make an upload. Share, comment, let me know what you think. Let's get to the task in hand. Let's hit the charts. Okay, so here is what I've been talking about, right? And I just want to take this very slowly, right? You have the time. If there is something you do not understand, just rewind. Make sure that by the time we move forward, you understand what we're talking about, because I'm going to mix this with charts, right? So that you can see this in actual market environments, right? So let's start off with an improper break, or a fake break, or a fake out, normally as they call it, right? But I normally call it an improper break. So this is basically, as you already know, this is a bullish trend. This is an uptrend, right? And as you can see, hence I said in the market structure episode that it has to be a consistent series, right? In other words, when we're on an uptrend, we have to see higher highs and higher lows being created, right? The current high, in fact, has to be higher than the previous one. Higher low, the current low has to be higher than the previous one, right? And this is something that we have to see throughout the pardon, my phone was just ringing. Love, can you take this? It's mom, just tell her I'm busy. Pardon. As I was saying, that we have to see price moving in this order as is. The current high has to have violated the previous high, and the current low has to be higher than the previous one, hence higher low, right? I'm not going to go through this right now because I did an entire episode on how to basically identify read market structure. So right now, the main topic, the main question is, what is the difference between an actual break in market structure and a fake break? So here this is what we call a fake break. Okay, this is what we call a fake break, and I'm going to explain to you just now why. Remember what I said, has to be a series. In other words, after higher low, we have to see a higher high, higher low, higher high. Has to be higher than the previous one, and in this instance we can clearly see that it's not the case. It's not the case. This high is definitely not higher than the previous high. And in this instance, if price so happens to move and break the previous higher low, this is not an actual break in market structure. This is not what you're looking for. This, in fact, I call an invalidation. This is what I, on a normal basis, call an invalidation. When the current high did not violate the previous one. You see, it traded below the previous higher high. So if it so happens that price now starts trading to the downside, violating the previous higher low, this is not a break. This is not what will shift the market to start trending to the downside. In fact, what will happen is price will simply correct this. This is why you'll normally see price now trading above that area. To do what? To correct this error. Because this is an error. This is an error. Price has to move beyond the previous higher high for this to be classified as a break. And this is not what we are seeing right now. It's legit not what we are seeing. Right? So what normally happens is that price will now just test a fair value gap, resting below the previous higher low, mitigate on it, and then start trading above, targeting that previous higher high to correct what? An invalidation. This in normal terms is what they call, a bullish flag. Yeah, hence I said that I'm gonna show you ways for you to trade this so-called candlestick patterns in a way that correlates with market structure. Yeah, so the whole idea behind a proper break is that we need to see price first having to have violated the previous high. Had price from here moved from here straight without creating any internal structures, this would have been what we call then a proper break. Now let's try to translate this in actual price. So we can clearly see that price has been moving to the upside, creating a series of higher highs and higher lows, right? Higher high, higher low, higher low, higher low, and then here's that invalidation. Price did not trade above this area. Instead, it had a sharp turn to the downside, violating this. This is not a break in market structure. This is not what it is. This in simpler terms, this is just what we call a grab of liquidity. In other words, traders that had trades, below this area, the stop losses below these areas, they were all stopped out. And after that had happened, price mitigated on a fair value gap on lower time frames, because here we can clearly see that there's no place. But if you can go on higher time frames, I bet money that this area is just a mitigation on a fair value gap, and price will start moving to the upside. Right, for now I'm not going to talk too much about these fair value gaps up until everybody is set with market structure, because I'm not going to feed you anything that is gonna make it difficult for you to comprehend structure. First, you first have to master structure before you get into any sort of strategy. Okay, same thing right here. I want to show you higher high, higher low, invalidation, price traded lower, then started moving to the upside. This is the same thing that we are seeing here, but on a smaller scale. Right? For this to have been classified as a proper break in market structure, we should have seen at least price first trade above this area. It should have been the first move first before anything else. But because that is not what happened and price traded below this resistance, This is not it. This is a fake break in market structure. And then what normally happens is that after price has finished doing whatever it was doing, either mitigating on a fair value gap or, just stopping traders out, then you'll start seeing trades, the market moving to the upside. So these are things that you have to be very careful, especially when you're trading market structure. Yeah, here's another example. Same thing, same scenario. Price was moving higher, higher low, higher high, higher low. Price traded below, and what simply happened was rejection to the downside, grab on liquidity or mitigation on fair value gaps, and then price started trading to the upside again. This is a different chart. Something similar, but it's actually different. So I'm sure by now that you are seeing a pattern in a way. So because price did not trade above this before breaking, this is what I classify as an invalidation or an improper break, or a fake break, or a fake out, whatever you want to call it. So price has to trade above that previous high first before breaking structures. Why? Structure has to be respected. How is structure respected? When a series of higher highs and higher lows are created. So the moment the next higher high is not created and price trades below the previous higher high, even if price can move to break this area right here, even if price can move and break that area, find a level of support somewhere here, either on a fair value gap or an order block, depending on whatever you're looking at. Buy that thing and just hold up until that previous high that was never violated. I guarantee you, if you can just focus on what I'm showing you right now, there'll never be another strategy that you will ever need, even if you don't know what fair value gaps are. If you don't even need to know what supply and demand is. All those things will never matter once you understand how market structure moves. Believe you me on this. I've been doing this thing for years. Yeah? So now let's move to a proper break. Let's move to a proper break. Higher high, higher low. Higher high, higher low. Higher high. And then from the higher high, price directly moved from the higher high, breaking the previous higher low. As you can clearly see right there, with no internal structures. Just take a moment, breathe it in. Just breathe it in. You can rewind and actually look at the different illustrations. Alright, this is going to be a very short lesson because it's a very straight to the point topic. Just rewatch the video, it'll make sense sooner. If it doesn't make sense, just comment in the section that okay, you need more clarification so that I can create a much clearer video. But I believe this is as clear as it gets. Right? Higher high, higher low, higher high, higher low, higher high, and then from that higher high, it should move directly to break that. You see, the previous structure was something of the sort, higher low, and then no next higher high, price traded below, and then somehow it just reversed. This is the complete opposite of that. This is what we call a break. See, the previous higher high was traded above. See, price traded above the previous higher high before breaking. So had price created a higher low and then just did this, then it's a fake out, just like that other illustration in the charts that we just looked at right now. Right? And then from here, you can definitely expect price to start trending to the downside until we see another break with a retest, and then same thing. Hence I always tell you guys that don't try to predict the market, just watch what is happening on the charts and just try to react with the markets rather than you trying to be a prophet of the market. When you try to predict the market, chances are majority of the times you'll get your analysis wrong. Your analytics will be wrong when you try to predict. Rather react. Watch the shifts in market structure. Follow the trend. It's very simple. Hence I always tell you guys that don't overcomplicate your trading, strategy. Here is an example of something that happened last week. Higher high, higher low. Higher high, a break. Price did not test. I already did this video. Price moved down and so forth. Directly from the higher high that violated the previous one, directly from that, price moved to the downside. Yeah, I can show you right here. Pardon. Let me show you something. Higher high, right? Higher low. Price did not trade above that higher high, the previous higher high. And what did it do? It traded now below this area. Someone might have assumed this to be a break in market structure, but you already know that it's not a break in market structure. Why? Because the previous higher high was never violated. So you want to see the previous higher high being violated first. Hence I said in the previous slide that once you see price doing this, find an area of support, enter the trade, exit at the next high. See, you would have been safe. Yeah, and then after, that's when price now started to break. Actually break from that higher high, moved directly to break the previous higher low, and price started trending to the downside. Another example of something that actually happened recently, yesterday. Check this out. It's quite simple. I'm gonna make this thing as simple as I can. Higher high, higher low, higher high, from the higher high directly, just a nice dash to the downside, and then a pullback, and then a trade-off, a sell-off basically. See, there are no fake outs. Price moved directly from that high, to break this low, and this is what we classify as a shift in market structure. This is where I entered on yesterday's setup, right? See this? Price moved up. I already knew the price was moving down because of this shift, right? So I wanted to, at least price to come back and trade below this area, but I'll get into details just now. Now watch this. After the break, price went to test and then started creating what looked like higher highs and higher lows, right? And then it broke that area, giving us another area to enter, of which is where? Right here. Right? Break, pull back, resistance turned, support turned resistance. And then what happened? Price started trading to the downside. Very simple, this thing. It's very simple. In fact, I'm gonna have a live session with people who are able to enter the live session, to join the live session. I actually caught this move a bit late. I believe I was somewhere here when I caught the move because I came in late. So by the time I actually got on the charts, price had already moved a bit. So I kind of got it late. But here it is right here. Much clearer, right? Check this out. Break, pull back. But as you can clearly see, the price did not really trade into that area to test the structure. And what happened? Price pushed harder to come back and test it right there. This could have been your second entry, with your first entry being right there, expecting price to move to the downside, of which it did. And here's the proof. This is the setup I'm talking about. So I caught the trade a bit late. I should have entered somewhere here, this is where the retest happened. But I got, hence I said I got in a bit late, and my stop loss was hit like in the morning, midnight hours, somewhere there. My TP, I mean, pardon. You get what I'm saying? So here even is the proof. Here's the proof of the trade, and this thing actually works. Do not complicate your trading journey with all of these strategies from everyone on YouTube, mixing this with that. Understand market structure. For your life to be easy, understand market structure. Okay, and that's about it. I do hope you found that very educational. Yet again, if you have any sort of question, do not hesitate to comment. Just let me know what you think. If you have any question or you found yourself confused at a particular topic, just hit me up. Either if you are on Telegram, just hit me up on Telegram. If you are not on Telegram, just hit me up on Instagram. I'll leave my details right there. So be sure. Yeah, I did make mention about the commentary between my friend and I, and the only thing that is beating us is actually agreeing on the time. So he is a very busy man, and the hours that he's available is generally the time where I'm unavailable. So we're actually trying to work around that and see what we can do to, you know, make that very conducive. But that episode will be uploaded. I'm just not gonna put a particular day on it so that time can be, you know, agreeable in a way. So without wasting any more of your time, thank you guys so much. You guys have been wonderful. Stay blessed, keep safe. May the good Lord be with you.